What's up, speculators? Today we're looking into a hot topic that is endlessly popping up in the crypto world, Bitcoin ETFs. You've probably seen or heard the term, but what exactly is a Bitcoin ETF and why is it making waves? First off, ETF stands for Exchange Traded Fund. Think of it like a basket. Instead of buying individual stocks or cryptocurrencies, you buy shares of this basket, which holds a bunch of them. The stocks or cryptocurrencies in the basket are purportedly picked by experts with their fingers on the pulse of the industry. This should make investing easier for the average Joe, as you don't need to know all the technical ins and outs of the market. Now, when we add Bitcoin into the mix, you get a Bitcoin ETF. The basket, instead of stocks, holds Bitcoin or contracts based on the future price of Bitcoin. So why is everyone talking about Bitcoin ETFs? Well, two words: accessibility and safety. A Bitcoin ETF lets you invest in Bitcoin without the hassle of managing wallets or private keys. You trade it just like a stock through traditional investment accounts, which makes it a lot more accessible to investors who don't want to use crypto exchanges. Plus, it's regulated, which offers a perceived layer of security that some say direct crypto investments lack. Well, for the average investor with no idea about crypto but sees everyone else talking about it, this is quite exciting. A Bitcoin ETF could open the doors to investing in Bitcoin with the ease and safety of trading stocks. No more worrying about losing your wallet or getting hacked. Plus, it signals broader acceptance of Bitcoin as a legitimate investment, potentially leading to more stability in its price. But there's more to it. It's not all sunshine and rainbows. Critics argue that Bitcoin ETFs might dilute one of Bitcoin's core values, decentralization. Plus, the fees associated with ETFs could eat into your potential profits. It's a bit of a trade-off between convenience and control. Let's take a look at the big dogs in the Bitcoin ETF space with some recent numbers. The top dog is the Grayscale Bitcoin Trust. They're sitting on a mountain of Bitcoin, 339,535 to be more specific, which adds up to a jaw-dropping $23.6 billion. They've seen a pretty impressive year-to-date rise of 76.75%. The average trading volume is through the roof too, with over 18 million shares changing hands daily. Current second place is the BlackRock-owned iShares Bitcoin Trust registered, with around 250,000 Bitcoin worth over $17 billion. However, BlackRock is on track to overtake Grayscale in April due to their current spending spree. In third is Fidelity's Wise Origin Bitcoin Fund with a neat $10 billion in Bitcoin, and investors are snapping up shares at around $60 at the moment. And in fourth place, there's the ProShares Bitcoin Strategy ETF. They might be the new kids on the block with $3 billion in assets, but they're no slouches. They boast a massive 59% year-to-date increase. And talk about busy, nearly 25 million shares are traded on average each day with a closing price of $31.26. Geez, I wish I just had one Bitcoin, let alone 250,000 of them. In closing, Bitcoin ETFs are a game changer, making Bitcoin investment accessible to the masses and signaling its growing acceptance. But, as with any investment, it's crucial to weigh the pros and cons. What do you think? Are Bitcoin ETFs the future of investing, or do they stray too far from Bitcoin's roots? Put your thoughts in the comments below. And if you found this brief breakdown helpful, give us a thumbs up and subscribe to the channel for more simplified crypto content. Until next time, keep your investments smart and your curiosity alive. See you in the next video.